Hey, Chapter 3 of Cost Accounting, and uh, I'm Alex, accounting tutor. This is accounting for labor, so pretty much payroll. And so I'm not going to, there's not much more different. If you see my 202, if you see my 202 videos, I'm not going to go all the way into payroll because I'm going to do a whole video series on the class. There's a whole book on just payroll. But I'll basically touch on the, the important differences in a manufacturing setting and system, and then I will um, probably do an example problem too. And I hope the board was the way I'm doing it now is a little bit better, less shaky. I think I like that a lot better. Okay, so there's factory payroll costs are divided into two categories: direct labor and indirect labor. So direct labor, also known as touch labor, represents payroll costs traced directly to an individual job. So direct labor costs include the wages of machinists, assemblers, and other workers who physically convert the raw materials into finished goods. So they take the raw wood, metal, rhubarb, whatever, and make it into a finished good. Now, indirect labor um, consists of labor incurred in a variety of ways that are not traceable to individual jobs. So that's called indirect labor. Oh, and by the way, direct labor would be debited into work in process. So when you're crediting payroll, the payroll account, you're going to debit the work in process for the direct labor. And so indirect labor costs include the salaries and wages of factory production manager, department supervisors, forklift operators, janitors, and factory accountants. They are all indirect because they are all support jobs, pretty much. So they don't actually work on any particular product or job, but they do contribute to it. But so their costs are going to be shuttled from payroll credited to factory overhead because you can't actually trace the cost of an accountant or a janitor or a supervisor to any particular job because they're not actually working on it, but they are providing support. So basically, you just record the hours worked, or the output, or the how much if they're being paid by piecework, how much they're making. There's wage plans. Um, Usually they're established by unions. Usually they're established by managers and approved by unions, and they have to comply with the regulations of government agencies. Um, an hourly rate plan establishes a definite rate per hour for each employee. The hourly rate plan is widely used in simple reply, so that's normal to be paid hourly is the usual. Productivity is measured as the amount of output per work. So like if I'm being paid 15 bucks an hour to build chairs, like I'm taking the raw wood and making it into a chair, and let's say I put the legs on the chair, and the next guy puts the backing. I'll be paid my hourly wage, but they'll be keeping track of how many pass through my position and how productive I am by a percentage. So you can figure that out over a period of time. The piece rate plan, different than an hourly, it's an incentive wage plan. It's where if let's say I'm an operator and I do 2,200 parts in a week and I get 30 cents per part, I'd make $660 for the week. And so you can be paid by how much you make, your output, actually how many pieces. Like if I make 10,000 pieces of bubble gum a week, but I'm paid 3 cents a piece of bubble gum, then I make like 300 a week, something like that. So I'd still make a good wage. Modified wage plans is when you give people an hourly wage, but then you also pay them a piece rate. And so that way, there's also, you get a makeup guarantee, where if I work 8 hours, I make 12 bucks an hour, but then I also make 30 cents per unit I make. So if I'm guaranteed a minimum, I'm guaranteed $120 a day no matter what. So if I for some reason make less, if I don't make 120, like I underperform for a day, they'll make up that guarantee. They'll make up that wage. It's to make sure I get at least a minimum amount of money. Um, and that cost, that makeup guarantee, is going to be an factory overhead. And of course, we have timekeeping. So like how people clock in and out. Usually people have, you log in. Most of the time it's not really punch cards anymore. You're going to log into a computer to log on to work, log off. There's a cool thing, I guess, a new app. Employees can log on to work through an app now on their smartphone. Pretty neat. The payroll record is, so each employee was going to have a labor time record that checks in, like how when they check in, when they check out. And it depends on the job. So if I'm working on job 402, making chairs, that's going to be different than if I work for machine. If I'm repairing a machine, that's factory overhead, indirect labor. But if I'm working on the product, it's direct labor. Each employee is going to have an employee's earning record for each employee. So it's going to track all their deductions for the year, all their gross wages, all their net earnings, and then you're going to have payroll records that have every employee together. And so here you're going to, if you're doing payroll, you're going to debit payroll for the full gross of the employees. You're going to credit all their deductions, and then you're going to, whatever's left over between the gross and the deductions is going to be their wages payable, what you're going to give them on a check. And then when you pay them, you're going to debit wages payable, credit cash. And then when you're going to distribute payroll, you're going to credit payroll for the full amount, and then you're going to debit the work in process for the people who do direct labor, and then factory overhead for the people who are supervisors or janitors or cost accountants. Here's another one. If an employee works beyond the regular scheduled time but is paid an hourly rate, it's called overtime pay. That additional rate is allowed for extra hours work. The additional rate earned is referred to as overtime premium. So overtime premium is that half, you get time and a half for overtime? Well, that overtime premium is that extra half you get. So if I worked 50 hours a week, I'd get 40 hours at standard and then 10 at overtime. So you could actually take my 10, let's say I make $6 an hour. So 50 times 6 is my regular hours, and then half of $6 is $3. So then take that 10 times 3. That's my overtime premium. So you can actually divide up the premiums. And then of course, employers' payroll taxes. We have payroll. Employers have to pay taxes, so they're going to match. So I got a stuffy nose again. They need to match the FICA, so Social Security, Medicare. They match what the employee pays, and then they also pay SUTA and FUTA, state unemployment, federal unemployment. So employers. I never knew that until I took accounting, how much employers pay taxes on their employees. So it's not just the employees that pay taxes on their wages, it's also the employers. So you gotta thank the employers, for what they do. They do a lot too. What else is it? The more you know. And so it's just some journal entries. Sales salaries, administrative salaries. When you distribute in payroll, they go into their own salaries. Of course, accruing for payroll. Usually you do it every 2 weeks. Whenever you pay them, you do the payroll. A work shift. Special labor cost problems. If you there's pensions, you can take money out of their pay with pensions, 401ks. There's contributory plans, non-contributory. Graveyard shift sometimes pays maybe $1 more an hour because it's a worse shift, like it interrupts life. if you have to work a graveyard shift, you're not living a normal life, and so you're going to make a little bit more money because of that inconvenience. And so that's shift premiums are designed to attract workers to the later, less desirable shifts. So, oh, you want to work graveyard? No, not really. Well, we'll pay you a little more. Oh, okay. So it just kind of makes up for that whole stay up the whole night, sleep during the day, which I've done before. Jack in the Box, it was awful. But if sometimes sometimes people legitimately like that. That's fine. What else? Oh, bonuses. So I'll probably I could do an example on this one because this has some equations to it, some formulas that aren't always intuitive. So there's bonuses for bonus pay for a variety of reasons, vacation and holiday pay, and we'll go over that. Oh, well, that's the end for the chapter. See, that's why I like doing these explanations, just because I can kind of go over what to expect, and then I'll do I'll do an example problem. On this, I might be able to do 2 problems. Show you a good example. So, I hope that helps, and I will see you for the example, or 202, and yeah, I'll be back for another video. Thank you, and have a good day.